After enjoying a decade of oil-fueled growth, Russia is now facing tougher times amid low investments and weak demand for its exports. Joining me down the line to share his insights on one of the world's most influential economies is Dmitry Dolgin. Dmitry, with year-on-year GDP growth at just 1.2% last quarter and growth in investment and industrial production nearing zero, stagnation seems to be the most apt description of the Russian economy, according to some. Is it time that Russia embraced structural reform?
Well, obviously, the Russian economy has lost steam. It's becoming a general consensus following very weak 9-month figure that this year growth will be at a very disappointing rate, probably at around 1.5%. And more than that, we here at Alfa are concerned that there will be also no rebound in growth next year, and this is what makes us different from the market and the government. We believe that the reason for this sort of pessimistic outlook is because we don't believe investment growth will improve. First of all, Olympic construction is almost over, and secondly, the natural monopolies capex programs will be under pressure of the recent decision to freeze tariffs for the next year. So obviously, in order to achieve better growth, Russia needs some structural measures that lie beyond conventional macro management.
Some analysts are concerned the GDP seen in Putin's first 2 terms as president is set to erode, while others believe that economic improvement in Europe will serve to support Russia via foreign trades, and this will be sufficient in the interim to keep Russia's economic engine functioning. But what are your thoughts?
Well, in a way, I agree that in the early 2000s, Russia benefited from very favorable external and internal factors. Apart from the obvious external factors such as growing oil price, Russia also benefited from a favorable demographic situation. Namely, the labor force was increasing, and as a result, it allowed Russia to show pretty high growth rates without any strong increase in any strong growth in labor productivity. But in the coming years, this favorable demographic factor will evaporate. So without any substantial increase in labor productivity, which is doubtful, the maximum growth rate which Russia will be able to show in the coming years will be limited at around 2% year on year, and this is the key reason why I don't believe that Russia will be able to benefit from a potential improvement in the global growth the market is looking for.
Despite the weak economic outlook, many analysts have become sceptical regarding the prospect of a rate cut. Do you agree this is the most beneficial policy at present?
The key reasons for Russia's deceleration are not monetary in nature. They're mostly structural and have nothing to do with the cost of money. This is the key reason why I don't believe any cut in the rates will be beneficiary. And there are also more practical reasons for the central bank against any cut in the interest rates, and mainly because so far there has been no success in curbing inflationary expectations. The inflation has been accelerating lately, despite the guidance by the central bank. And even if in the next year we'll see some deceleration in inflation, this effect will be only temporary due to the tariff freeze, which I already mentioned. So as a result, there is no inflationary argument in favor of the rate cut in the foreseeable future. should central bank be pressured to lower the rates anyway, this will not result in acceleration of the economic growth rate. I believe most likely it will just result in acceleration of the capital outflow.
The trade surplus expanded 9.3% in September from a year earlier, following gains of 31% and 24% the previous 2 months, according to Federal Customs Service data. That has supported the ruble, which strengthened 1.4% against the dollar in the third quarter. But what is your outlook for the coming months?
In my view, the reasons for some favorable performance of ruble in the third quarter was rather external and reflected the general optimism the global markets had regarding this delay in potential Fed tapering, and actually the internal factors were not as supportive. If we look at the current account data for the third quarter, which includes not only the trade surplus but also services balance and current payments by Russia, we'll see that the current account in the third quarter has shrunk to $1 billion, and this is the lowest result in 15 years, and that's despite the fact that over this period of 15 years, the oil price has increased by around $100 per barrel. So fundamentally, this is a very negative sign for ruble, which I believe has not yet been priced in by the market, because the market is now, like I said, is more focusing on the global developments. So as a result, I do not exclude that thanks to some strong performance by the markets, by the global markets in the coming months, ruble may find some support, but fundamentally and in the long term, ruble is set to depreciate going forward.
Dimitri, thank you so much for your time today. Well, viewers, we're approaching the midway point of the trading week, but the Dukascopy TV team has plenty more exclusive interviews to bring you, so please do keep clicking back. Goodbye.